Are you looking to buy a home? Like the majority of people, you're probably going to need a mortgage. If this is your first time here, thank you. If you're a returning viewer, I appreciate it. Remember to hit the subscribe button, the like button, and then leave a comment below. And don't forget to hit the bell button so you can be up to date with the latest real estate tips and trends. In this video, I'm going to talk about the 5 questions you should ask a lender. The first question you want to ask is, what type of loans do you offer? There's more than just one type of loan. There's a conventional loan, a fixed rate loan, a variable rate loan, as well as government insured loans. Conventional loans are usually held by your bank. They'll either hold on to it for the length of the loan, or they may sell it off again. But either way, it has different requirements than some of the other loan types. There's fixed rate, which is the same interest rate throughout the length of the loan. And then there's adjustable rates, that the rate will adjust to the market. So if the rates go up on the market, depending on how the terms are structured in the loan, your rates will go up with the market. Or if the rates go down, the rates will go down with the market. And then there's government insured loans, like your VA, FHA, or USDA loans. Not all lenders handle all types of loans. Not all banks have the same packages. So it's good to know what your bank or loan officer offers you. Some loan officers are better at government loans. Some loan officers are better at handling conventional loans. So interviewing them and talking to them and seeing what their experience is will only help you and benefit you in the long run. I'll do a future video on the specifics of government loans, but for now, just ask the question and find out what your bank or lender offers you. The second question, what will my interest rate be? Your interest rate and your APR are based off of your credit score and your credit history. But George, isn't the interest rate and APR the same thing? Well, not necessarily. Interest rate is what you typically think of when someone says this is your rate for your interest. It's the amount you're going to pay to borrow the money throughout the length of the loan. Depending on the loan type, like we discussed earlier, it could be variable or fixed, but that's the amount you're going to pay for borrowing the money. APR, the annual percentage rate. So if you use points to pay down your rate, or if there's extra fees involved from your lender, then this would be added to the APR to give you something to compare when talking to lenders. The one thing you have to be careful of when looking at the APR is that you have to make sure that you get all the same fees in the APR calculation. So when you ask for your APR, ask for all the fees involved with the mortgage so that you can compare apples to apples. Which is better, interest rate or APR? Unfortunately, the answer is it depends. If you intend on living in the house for 30 years, then the lower interest rate or paying points so that your rate comes down might save you money in the long run, and you might pay less interest by the end of the loan. But if you're only staying in the house for a couple of years, then it doesn't make sense to pay extra money up front to pay points so you can get a lower rate. If you're going to move in a couple of years, paying extra for points doesn't really make sense. Paying down the points usually only makes sense if you intend to live in the house for an extended period of time or the entire length of the loan. The third question, how long will it take to close? Depending on the loan, it could take a different amount of time. On average, I think we expect about 45 days to close. It's plus or minus, and again, it depends on the type of loan. Conventional loans can usually close a lot faster. Sometimes it can take longer, but it all depends on your lender. FHA and VA loans tend to take longer to close. They have more requirements and are a lot stricter on what they can and can't do. So again, talk with your lender, depending on your loan type. You need to know how long it takes to close so that you can put it on your offer when you're buying a house. There's times when we've had a lending issue for a closing, and it's not the lender's fault. Maybe the buyer took too long to get them information, or they delayed on getting them the documents that are required. So as soon as you pick a lender, ask them what they need and get it to them as soon as possible. Don't wait until you find a house. Don't wait until you're under contract. Get what your lender needs to them immediately so they can start the process to get you approved the whole way through. And it's going to make everything a lot smoother in the end. The fourth question, can you lock my rate? A rate lock is exactly what it sounds like. It locks your interest rate so that if the market goes up, then you're not penalized for it while you're looking for your house. Now, rate locks tend to have an expiration, so they might lock your rate for 30 to 60 days. You need to know that up front. You have to understand what these rate locks are. Some lenders can lock your rate before you're under contract, so while you're looking, you're locked. Other lenders will lock your rate once you're under contract, but make sure you understand what your rate lock includes. Talk with your lender, be clear so that there's no surprises later. Last but not least, number 5, how much am I approved for? I saved this one for last because it's probably one of the more important ones of all the questions you can ask your lender. The problem with being approved at a maximum value is you may or may not be able to afford it. There's 2 parts to this question. What's the maximum that I'm approved for? And then you need to find out how much you can afford. For example, if you're renting for $900 a month or $1,200 a month and your budget is good, as in you're comfortably living, you're within your means, you can still save, then maybe you should ask your lender, hey, how much of a mortgage can I get that I would pay $900 a month for? Or how much of a mortgage is a $1,200 payment? So this way, you know how much you can afford and still be within your comfort zone of your budget. You do not want to be house poor. Knowing your budget before you go to the lender will help you know what you need, because the lender can't tell you what you can afford. If you don't have any lenders in mind, you can always start with who you bank with. But if you already have a realtor that you're talking with, they usually have a handful of lenders that they have worked with and know that are good, that will help you get to closing with minimal issues. If you enjoyed this video, give it a thumbs up. If you haven't subscribed already, please do so now. Hit the alert button. Leave some comments in the comments below. Let me know if there's any topics you want me to discuss. Look forward to seeing you again. Have a good one.